Yolanda, as Alicia said, risk appetite appearing to re-emerge into this market, but a pretty mixed picture as we enter the afternoon here, with the financials and the banks under pressure and the industrials and resources really propping up this market.
Yes, Stephen, we see banks, banks have had a nice run last week. We saw a bit of profit taking, and we've seen commodities being supported by Asian markets. So really, Stephen, a mixed bag. The market, very low volumes in the market today, and investors really looking for some direction.
Mm-hmm. Of course, we had that news earlier this morning that Abu Dhabi was giving $10 billion to Dubai. At the beginning of last week, it was worries about Dubai, and then also worries about Greece's debt problems and Spain's debt problems that sent the markets a little more volatile. I mean, do you think we're starting to see some more appetite for risk coming into this market?
Stephen, the market is really looking for positive data. So the news coming out this morning with the 10 billion is supportive for emerging markets, especially in terms of looking for riskier appetites. And I think what's important about the 10 billion number this morning is that if you look at the company, it's going to provide, or it's going to cover the loans, the 4 billion, and then it's going to cover another 1 to 2 billion for the loans that need to get restructured next year. So that comes up to about 6 billion, and so it gives the company about 4 billion rand to really play with in terms of capital. So really giving a bit of stimulus to that sector, and that I think is what's really spurring the move to riskier appetite and supporting commodities.
Mm-hmm. And of course, through all this, we've seen more positive data coming out of the United States following that very good jobs data a week past on Friday. We had consumer confidence, retail sales numbers, and also business inventory numbers coming out of the US on Friday, and also a little bit more positive than expected. So it looks like the momentum is being retained in the United States at this stage.
Yes, Stephen, unfortunately this afternoon there isn't much out, but if we look at the rest of the week, we see building permits and housing new starts, and we really need to see, because right now the market is happy with the fact that, we've perhaps reached a bottom, that we're going to have a slow recovery, but we need to have sustained positive news coming out, and investors will grab any good news that comes out and really run with it, especially with closeout this week. In terms of volumes, even though they've started quite light, we really need to see some good news to perhaps spur investors to take positions out to March and possibly even to June.
Mm-hmm. How about local data? We had, of course, the third quarter bulletin from the Reserve Bank last week that shows that household consumption is still very much under pressure. Retail sales not very positive last week at all. This week we're getting consumer inflation numbers and jobs data numbers. Do you think that the market will be focusing on those data?
In terms of our local recovery, I think we're going to see that more jobs are going to be cut in Nedbank's expectation, and that really will be a reflection of all the lower numbers that we received last week. We, however, are expecting that CPI, which we should see tomorrow, to still remain within the target band, with producers passing on lower prices as well as lower price petrol, really helping the consumer. However, we could possibly start seeing the effects of the electricity hike come through. So possibly risk to the upside, but still we're expecting it to come in at 5.9 within the target range.
Mm-hmm. And of course, you're referring to the previous electricity hike. We still have the potential hike we might have next year of 35% if Eskom is allowed to go ahead with that. So it's going to make a very difficult decision for the Reserve Bank's Monetary Policy Committee when they meet on interest rates again next month, isn't it?
Stephen, yes, and they have come out to say that they're not going to be lowering rates in the future. We're going to see how consumers behave in the next month with retail sales coming out. Those numbers are going to be very important. Still very much under pressure, but really don't think our consumers are really going to recover into late into next year. So they're going to be under pressure in the long term. Possibly we might only see a rate cut in 2011. So still a long road ahead.
Mm-hmm. And of course, this doesn't bode very well for our retailers in this final run up to Christmas, does it?
Yes, Stephen. I've, in my personal capacity, been quite positive. But as one goes, as one shops, you look around, people are just not carrying as many packets. So people are still in the mall. Parking is still hard to find when you go shopping. but hopefully we'll get the benefit of this holiday this Wednesday. But yes, consumers still under pressure, and not well for our credit retailers, especially, are going to be under pressure, and our durable goods retailers are going to be more under pressure than any of our cash retailers.
Of course, not much corporate news out today. We did have a small announcement from Altec that it's selling a portion of its vehicle tracking business to black investors. Your view on that deal?
Well, I think it's good for the share price. If one looks at their strategy, they're focused in terms of telecoms, their broadband strategy into East and Eastern Africa. So really, they look like they're selling it at fair value. One really doesn't look. The final details haven't really been announced. So positive. We see the share price hasn't really moved. We're still positive about Altec going forward. It probably has potentially 15% upside, and Nedbank's got a 1-year target of 82 Rand and 85 cents. So still a very good move for them, focusing on their strategy, and hopefully a good year for them ahead.